David, I'm going to start with you. You heard the minister's very upbeat, very positive review of where Egypt is, where they've come. What's your view on Egypt's performance in the last, under the EFF, and where do you think it's going to go next? Just kick us off with a nice high-level macro view.
From the perspective of global portfolio managers and institutional investors, the Egyptian reform story in the last 3 years has been phenomenally successful. There are a small number of countries that includes these days Brazil, Ukraine, and maybe one or two others, that within a sort of broad emerging markets context can genuinely present to the world a kind of disciplined approach to fiscal management, to monetary policy management, to making important and big steps like exchange rate flexibility. So the overall reform story so far has been extremely impressive. There's one thing that I think that is very important to understand in terms of thinking about what happens next. The first is a set of questions about the aftermath of the EFF. There are plenty of countries that have track records of policy discipline while they're drawing transfers from the IMF facility, where discipline is lost in the aftermath. Egypt needs to make sure that it's not one of those countries. And that's particularly true because I really don't share the optimism that the audience expressed in thinking that however bad the external environment is, it's going to be a minor problem for the Egyptian economy. I may be a pessimistic person, but I think the external environment that Egypt faces at the moment is kind of terribly bad, the trade environment and the external demand environment.
Egypt has always been vulnerable to external shocks just by the nature of many things, of its location, of its openness to global markets, and many other reasons like the oil price. Another factor is the Egyptian labor abroad, also in the region, and the importance of remittances for the Egyptian economy. So many factors that would make Egypt vulnerable to external shocks. Now we were talking about pretty much every country can be subject to these shocks, but what can help countries to mitigate these shocks and absorb them? So the government of Egypt did many reforms in the past 3 years that would alleviate the burden of such shocks. We spoke about the liberalization of the exchange rate, the fiscal consolidation reforms, all that were considered for so long as taboos for the economic policy making. My very short answer to your question is that, of course, I share David's not pessimism, but opinion that Egypt would be affected but global environment, but that domestic policies are very important to mitigate that impact.
Outside of government fixed income, government paper, where do you see as interesting investment opportunities inside Egypt for an investor like yourselves? I mean, are you buying public equities, private equity? Where do you see the opportunity to make reasonable returns for your clients?
I think all of the above. So increasingly, the weight of the economy, I think, on a multi-year view, is going to move more towards the corporate sector. There had been the effect of higher interest rates, which had stunted the growth of the corporate sector, attracted more flows into debt, made it difficult for companies to borrow and expand, made it less attractive to foreign direct investors, all things we know. That can, and I think will change.
From an economic perspective, it seems to me there's two ideas that have kind of bubbled up in this conversation so far that are critical. The first is the point that Hoda made about the relationship between export growth and FDI, or trade growth and FDI, and the other is the point that you made, Richard, about the dangers of excessive financial liberalization. And I think the kind of critical issue for Egyptian policymakers is to get the balance of what you could call real liberalization versus financial liberalization right?
In different markets, I think a lot of governments, they talk about FDI, but a good measure of seeing how the investors, how the people who put money into it, is to see in which area there is the FDI flow. Whatever has happened in Egypt till now has been in the area of energy, which is the safest sector. Unfortunately, energy is also very capital intensive. It's not a labor intensive industry, which is creating a very big challenge for this market. Now, where it needs to come is industries where it's more labor intensive. And I'm going to give you a simple example. Take the tourism industry in Egypt. The total number of tourists in Egypt is around 10 million a year. I agree with David on what he's saying, that it's just not liberalization, but it's focusing on certain industries. Energy is an easy industry, but focusing on industries which are labor intensive and putting the head and putting the resources on them, which is going to make Egypt move forward.